So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Welcome back to Ninja Trader Live. This is Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with Ninja Trader. And as always, it's my pleasure to welcome back to the show, Anthony Crudele. Anthony, how are you today?
I'm doing good, Tom. Interesting times right now in this market. I know so many people want clarity, and I could tell you when I look at this market, I've been talking about it lately. I've been on the sidelines, not the easiest market. So if you're out there and you're struggling, or if you're doing great, either way, this market is not the easiest read, but we're going to go over the charts today. And always a post FOMC day is always interesting to me because especially this week, Tom, right? We've got so much going on. I mean, I don't remember a time where we've had this much macro stuff. I can't remember a time, to be honest with you.
At the same time, it's like feast or famine, right? Last week was not a lot of news, nobody speaking, not a lot of geopolitical stuff happening. And then bam, this week, especially yesterday, today, on top of anticipation of FOMC, you've got what's happening in the Middle East. You've got earnings week, right? Tech earnings, like moving the markets around. There's so much to digest.
Yeah.
And it's, it's the middle of the summer. We're supposed to be kicking back, right?
Yeah. End of the month, beginning of the month lows. I've always looked at FOMC as the day of FOMC is always the overreaction. Day 2 is the reaction to day 1, and day 3, we really find out what the FOMC really did to the market. And then on that third day this week is unemployment. So,
Right.
and that could totally change everything again. I mean, the Fed, some would say, was a little dovish. Really trying to talk the market into that they're going to be cutting rates soon. You're seeing that in the bond markets. We'll go to those charts today, which should probably be a good sign for gold. Gold's getting a little bit of volatility today. Overall bullish on the charts, but today we got some weakness. You're seeing, weakness in the construction spending numbers. You're seeing a lot of data points that show that the Fed is probably going to be cutting rates in September. And I think that the market's baked all this in. We've also talked about where we were with, the Russell. Everyone's talking about the obvious trade. I've talked about this. When rates are going down, that should help the Russell. The Russell really got that move November of last year. And since then has done nothing. It got a little bit of a bounce, as everyone wants to call it, the rotation, the divergence between the indexes, between the NASDAQ and the Russell, and how the Russell has caught a little bit of a rally, and now it's softening up a little bit today, because all this really should kind of be baked in. I don't think that there's anything maybe too surprising for me. Now, mind you, I'm not a guy who follows every single data point to where I'm like, oh, this number is a little bit different than this, and this should change that. I look at it as an overall theme.
Right.
And I feel like this is kind of where I expected things to be. Like we're within that parameter of where I think expectations are, where we thought the Fed would probably, at least going back several months now, the Fed would probably be looking to cut in September, maybe a little bit soon after. But once again, I don't think that the Fed is that big of a deal in the overall thing right now, perspective, because what are they going to cut? 25, 50, 75 basis points over the course of the next 6 months. Market already knows that. You and I have talked a little bit about this. I remember I did a podcast and brought that up in here with Bob Elliott, and he really shed light on this for me, talking about how, earnings to me, I think, are the really big focus right now, because we got to a point where everyone was chasing, earnings, because earnings were just getting so pumped up looking into the future that the markets were, just in a race. I mean, look at NVIDIA.
Right.
And they just kept beating and beating and right. And so now we're to this point where I think that the market is reacting, I think, really well to where we are, right? We're digesting where earnings really are going to be. The Fed, we know, is going to be cutting rates. You've got so many different crosswinds. And when we get to the technicals, I've been talking about this for the last 2 weeks. It's just really a two-way tape. We have range expansion. You're going to have wide ranges in all these markets, because nothing, I think, technically is so clear where it's easy to manage risk for higher or lower from here. So to me, the algos are going to run with it. If you're a short-term scalper, like really short-term, this really should be a good time for you, because you should be able to just take your strategy signals, long or short intraday. As long as you keep it small, you're going to get opportunities. The key right now is don't lean too heavily in one direction. Right. I'm a directional trader. I am not a scalper. I scalp sometimes, but I'm not a scalper anymore. So I like clear direction. And if I find a direction I like to lean on it. I can't lean on any direction right now. I've not been doing that great lately. This has been tough for me, and I feel like a lot of times I'm stepping in. I'm like, oh, I want to be a little bit bullish. I step in, I work my stop, bang, I'm getting hit, or it's turning my way right away. And I'm going, all right, trail this. And next thing you know, I'm getting stopped out on that. Maybe for a small winner. Nothing's running for me really clean. And it's just been a time where it is what it is. Embrace it. Don't fight it.
Yeah. Now, one thing you did mention, though, I will kind of give my side of it, which is, I think you're right, spot on about the Fed. Like, we know the rates are coming. We know rate cuts are coming, and the market's priced it in. I think that's true for NASDAQ and E-mini. I think you mentioned the Russell leading, getting that big move at the end of the last year. That's because, the dot plot came out, it was 6 rate cuts. Right.
Yeah, that was the key. Yeah.
Holy cow, this is going to be great for Russell. Right. And then they kind of moved that carrot. Like, they kept moving that carrot down until here we are. We may get 2 rate cuts. We may not. Right. I think the key with the Russell is It's not a matter of will we. It's definitely when, because as soon as we know when, then all the process that all those small companies have to do to take advantage of, you know, uh, uh, um, investing their capital, right? They're not gonna invest right now. Rates are high, but when they know that rates are cutting, rates will be cut in September, then maybe they can start planning for October. Or if it's going to be November, then they can start planning for December. So the Russell is, I think, more about when they can start investing. Those companies can start investing again, and that'll take off. As opposed to the Nasdaq and E-mini, they're just absorbing the information, right? They've got That's why they react more to earnings than the Russell. I think you're spot on with that.
Let's start with the Russell then. And here's the thing about markets. Markets move in anticipation of the future so much faster than they ever have, right? Even going back to the days where there wasn't electronic trading, when people knew, or at least believed they knew what the future could hold, markets moved, right? Yep. And so when I look at the Russell, what's interesting about it is that now that the Fed has gotten to the point of actually like mentioning like September is probably pretty likely, you know, he talked about if they're softening, yes, we could see us going in September. The Russell can't move higher today, right? Yesterday was a day it moved up initially, and now, you know, you see today slowing down. And I know there's new data points and all this stuff, but the overall point of it is that I believe so much of this is baked in. And when I look at the technicals, like I agree with you that the Russell, it should have a limited bottom in it, but I don't know how much the upside here from a technical perspective is really in play. And when I look at the Russell right now, I see a the cleanest Bollinger Bands of all of them. And this is a 20 period, 3 standard deviation Bollinger Bands. And I always go to the Bollinger Bands because as fast as the market's moving, the Bollinger Bands are expanding outward, anticipating more volatility. And although all indicators are lagging, when Bollinger Bands start to smooth out and start to come back inward, like you're seeing here, where you're starting to see that flattening out and that inward, it tells you that we're boxed in. I mean, this is really the basis for my strategy, right? Is once I see that, I think that the Russell now has digested this move. And the reason why we're going lower today, you know, let's pull up the fib tool, is because the market's future volatility, looking at what the volatility could be going forward, is now stalled, right? Like we're at this point, I actually should move this over to here because this is really when it came in. Yesterday's high, to me, if you look at where we are right now, and I actually can move this out even further, this will give you the cleanest look of what I'm looking at here in Russell. I think Russell's probably a short now down to 2158. And that kind of goes against what we've heard, right? Like yesterday, that rally was, remember, day one overreaction to the Fed. Rates are going down, algos chase them higher. You could, whether you think the Fed was more dovish or not, doesn't matter. The market went higher, and the Russell was the one that made a higher high. And now today it's spinning back off lower. It's the reaction to yesterday. So when I look at the technicals, because that's all we can gauge on, when I look at it and say Russell's now short, Russell to me is actually one of the better looks that I have on the chart right now. Below 2272, I think we're headed to 2158. So now intraday, I think Russell's a market that I'm going to look for short signals. Now, the key is today's close to stay below this. And all this is on a Fibonacci retracements, 30, 50, and 70%. If it stays below 2272, I will now use short-term charts for signals to short Russell. Okay. And I go back to like the macro theme helps me understand the environment. The technical team, the technical side of the market helps me actually trade the environment, right? Yep. And so the macro will, it kind of leads to understanding why we're seeing all these crosswinds and this volatility. And then the technicals, it starts with Bollinger Bands for me, help me understand how I can execute it.
Totally agree. Totally agree. One thing I think you mentioned dovish. However, one of our commenters said you could take whatever you want out of what he said yesterday. Really,
you really can. I mean, there's no doubt.
You and I, we'll take different things from it, just like Jim and Mike Burke and everybody. I think what my take is the Russell didn't get the conviction, right, that there will be cuts September. And Powell said, yeah, we probably will, but He listed off the data points that could turn this around. So I think that's why we're seeing a pullback. It's not like totally baked in that September is a cut, even though everybody thinks it will and everybody expected him. It's the messaging that I think was off, not what they'll do in September.
And it goes back to like the point, and I'm glad that you mentioned this. I'm never going to totally understand what Fed Powell is doing or saying or what they may do. It's impossible. And first of all, I'm not even that person anyway. I'm not a macroeconomist, right? And so what I look for is clues. How does the market react?
Right.
How does the overall theme? And the reason I even said that they were because it was maybe leaning more dovish just because they continually talk like they want to cut. That doesn't mean they will cut, but they talk like they want to. And once again, the market is great at pricing in what it anticipates in the future right away, right?
Yes.
So whether that messaging I'm one way or the other, I go back to the technicals because that's all I can use.
Yep.
And what I see now is that like the Russell has baked in, it's priced, I think, good enough to where we're now in a consolidation, probably lower. 2158 is going to be a key area for me. We'll see what happens. I want to move on to other markets because I think that there's going to be a little bit of a theme building here. But to me, the Russell, I would not be a buyer of a dip today. I would be a seller of a rally. And today's close, how this trades, this is actually, I think, the cleanest look of the indexes right now.
Excellent.
S&P. So, the S&P, I've actually got the 821 and 34 moving averages up there. Hat tip to Ripster and Sati, two guys I follow on Twitter that are really good at this. And there's several others that look at this as well. But these are guys I follow. They follow, SPY, QQQ, and stocks. And I just think that I'm just trying to understand more of what's happening within the short-term moving averages alongside my Bollinger Bands to give me an idea of where we are, right? Mm-hmm. What's this environment? Look at this. And this is, to me, the worst environment for S&P as a directional trader. As a scalper, I think it's a really good environment. So let's be clear. It depends on how you're approaching the day. For a scalper, you could take a long or a short right now, and it's like, okay, what's the difference, right? Because you're not really leaning on one side. But as somebody who likes to be directionally and focus on one side intraday, it's tough. Look how flat the moving averages are. I know some people will argue, does slope matter? Does it not? The reason why it matters to me in this context is look at how flat the Bollinger Bands are that are bumpy, right? They're not really smooth like you saw in the Russell, like that balloon looking feel. This is like a very bumpy Bollinger Band with relatively flat moving averages. And why that matters is because the market could rip higher or lower. There's no trend. There's no trend.
Right.
This is just a square of range, right? A rectangle of range. And I find this to be very difficult because I can't predict where a low could be. I can't protect on where I think a low can be when it's made because this thing can rip all the way back down to yesterday. And what's it change?
Right.
Nothing.
And that's the whole point of a moving average, right? It's to smooth out those volatile day-to-day moves, right? And so if it's flat, you've got no trend. It's just saying, hey, we're here and we were there yesterday. We were there the day before, whatever it is. Right?
Exactly. I mean,
and you can swing around.
This is picture perfect of a two-way tape.
Yeah.
This is, if you are a high frequency scalper, this is your type of tape because the market is uncertain. I'm never certain about what the market's going to do anyway, right? I do my best to be able to protect and to be able to find a direction I could stay with. Right now, that is not the case in ES. The ES is a total chop fest, which can be very beneficial for some intraday strategies. And so the way I look at it is, if you are an intraday trader, take your signals small, keep your stops relatively tight because you're going to get another opportunity. Your opportunity may come at 9:30 right on the open, or it may come at 3 o'clock. You don't know, but there's going to be opportunities all day long if you're a short-term scalper, especially in S&P right now. Let's go to NASI. When I look at NASDAQ, this NASDAQ, this is just something I was looking at earlier. This NASDAQ, actually, I shouldn't even have this on there. I shouldn't even just remove it. When I look at the NASDAQ went from overbought to relatively oversold, but still trending lower. The NASDAQ is trying to find a bottom, but it has not quite found one yet. And I just keep up my short-term moving average here on the 5-day just because it's been trending relatively good to the short side. Didn't quite get oversold enough. I don't think that's a good low. You know how we always talk about good lows or good highs. I even looked at this during the day when I was looking at order flow. Just not I don't think it's a great low. I feel like the NASDAQ is still in this bottoming process. I would lean more towards short in NASDAQ, but still relatively two-way tape. But I'd lean a little bit more towards the short side just because it's not showing any signs of where like I could lean on a bottom. Like that low is a weak low. Like if they start pushing down there, I would not be surprised at all to see a ripper and take that low out. Just would not surprise me. But once again, it's the NASDAQ and it loves to go higher. So it's just a tough tape. You know, I don't even, I look at this and go, I'm not even touching this. I'm actually going to turn towards the close today or into tomorrow. I'll be focusing more on selling Russell. That's the only look I have in the indexes. So that's like my overall outlook on indexes right now.
And one thing real quick, Anthony, it is earnings season. This is tech week. Pretty much, right?
So today is what, Apple and Amazon?
Apple and Amazon. Intel's in there, but Apple and Amazon are the biggies. You still have Nvidia to come, I think, later, maybe like halfway through August. We don't hear from Nvidia for a couple weeks. So that just kind of throws that extra X factor into, this looks like technically it looks like we could be bottoming. It's not a strong bottom. Like you said, I see reasons why you might think it's a bottom, and there's something there that says it's not. But a bad earnings call on one company could just change this profile back to negative.
Especially Nvidia. I'd be curious to see how much Apple and Amazon move the needle today. Obviously they will. I think that expectations for Apple have come off substantially. Once again, I'm not someone who's looking at this too closely, but I look at, once again, as an overall theme. Nvidia is obviously the main player in this whole ordeal here. What they do, I think, is going to have the most impact on the index. That doesn't mean if Apple's down 5% that's not going to have an impact. It absolutely will. But the point of the matter is I just don't know how much Apple even moves probably on the earnings. I'd be interested to see what some of my options people I follow on X say about it. But overall, you're right. I just think that when I look at the indexes, the only thing I truly favor right now is probably a sell the rally in the Russell, because I do think that it's actually stalled. I think that the Russell is priced in as much as it can price in, and you're now seeing a little bit of that pullback come into play. NASDAQ and S&P to me are two-way tapes, and I'm just uncertain in them.
Got it.
Let's take a look at gold. I mean, we were going to focus on gold today, and I was looking at it, and I'm just like, it's interesting. Gold typically, I know you got Blue coming on after this. I'd love to hear his thoughts on this. You've got rates that are projected to coming down, and typically gold is going to do better in that environment. But gold is actually not done bad. It's actually done well in a rate increasing environment. But when you look at gold over the course of the past several months, it's done nothing. I mean, we're making higher highs. I get it. I mean, there's no doubt. But when you look at it, if you go back to where we've been the last 3-4 months, it's as sideways of a tape as you can possibly see. Yeah. But are we getting in an environment where gold might start to do well again? And what's interesting right now is that gold is in range expansion for me. And that means that I think that there's a higher probability we go higher now than we go lower. I put up the moving averages. Now you actually see some slope, right? Yep. I just put up the 21 and the 34 on here just because I don't really need a super short-term one for gold. I just want to kind of see the overall trend, what it's been doing. And you can actually see the moving averages are making higher highs. So we're spending more time on the higher end of the range, which is sloping higher. And you have the Bollinger Bands opening up like a mouth. I like gold to the long side intraday right now. I mean, I think that obviously today, tomorrow, probably even into Monday could be really bumpy, but I do think that when some of this dust settles, I think gold is in an environment right now where I want to be a dip buyer in it. And for the last several months, I've not even touched gold. I think I've maybe traded gold twice, maybe 3 times in the last 3 or 4 months. And it's been so little. And I definitely do this more on a swing basis. And when I look at gold right now, gold looks to me like it's poised for a rally.
Yeah, I mean, you mentioned the last 3 months. You can see it with the flattened moving averages. The Bollinger Bands are really tight, and we know, really tight Bollinger Bands mean there's no volatility, there's no movement. And that's why I like the way you use the Bollinger Bands, because not everybody looks at them as expanding, contracting. They look at it mean reversion, or a possibility of a breakout. But where are they right now? They're expanding. Great. That we're nowhere near the bands, but you're using the bands. I love that. Yeah, for sure. Gold we've been trading in 150 point range for 4 months, 3 months. um what's the next step for this, right? And you're right, with things changing on the Fed front, on the interest rate front, that could be enough to lift this market higher.
Yeah, I mean, gold is getting ready to be in an environment that should be conducive for bullish strategies,
Mm-hmm.
right? And we are all, no matter what you think as a trader, macro environments matter because they will set the tone and the backdrop to let trends exist for as long as they do. That's the key point. When I'm a technical trader, I am a technical trader. When I look at what's happening in the macro, that helps me stay in trades. It keeps me in trades. It keeps trends intact for longer. So that's the importance of it. As I know many people on, watching this, my YouTube channel and the Ninja Trader Network, are more short term. But to understand that if you get a macro environment that's conducive to a technical strategy on one side versus another, that will typically help you, and you'll go back and look at your stats and say, hey, my longs has just been doing better than my shorts. You go back to what this bull market has been. I was looking at my stats recently, and I'm like, man, I am really not doing well on my shorts.
Yeah.
I went back like 4 months. I'm like, I am losing pretty much, a good amount of the time on shorts, but my longs have been so much better. Why am I even almost looking to short, right? Obviously, because I trade two sides of the tape, I still look to be short. But
Right.
overall, the proof is there, right? The backdrop has been bullish for stocks, technically bullish. Even though I've taken some shorts, you look at your numbers, you're like, man, if I just eliminated shorts, my P&L will be better, right? And we're all subject to a period of time where macro works with technical, and whether you think so or not, that contributes to your overall bottom line. And it does so, and maybe in a way that you're not recognizing because you're so focused on the charts, but it does matter, right? And so if you get into an environment, it's why I look at macro stuff and understand it as best I can, because I will say, okay, if we get a big pullback in gold, is it being bought? Like, do you not only have technical reasons, do you have macro people saying, I want to buy gold? The more people that are looking at that, the more likely that trend is going to hold on a pullback, and the more likelihood that trend is going to extend on a rally. That is the difference. It doesn't necessarily play a role in specifically how I execute on my strategy, but it gives me more focused on the one direction that I want to look for. And if we get into this environment like we could potentially be in right now in gold, I want to look at more longs and I want to look at shorts.
So Anthony, you brought up reviewing your trades. My experience in baseball, I was working with a pitching coach, and he said he would ask his pitchers after they came out of a game, later after the game was done, if you could take back one pitch, which one would it be? And you had to have an answer, right? Is that something you could do as a trader too? If I could take back one trade, let's look back the last month. If I could take back one trade, which one would it be, and how much would it change my, let's say, performance for the month? Is that something you do? Like, maybe not at one trade, maybe it's a one setup, but is that something you do as like occasionally?
Oh no. I mean, I go back and look at it and like, I knew better during this time. Subconsciously, I knew better in this time with ES. Like, I got myself a little bit turned around where I was like short, and the next thing you know, I'm long, and I'm looking at it going like, okay, look at how bumpy these Bollinger Bands are, and I'm not making money. And I'm like, okay, man, you got to step back here. Like, when the tape is smooth, I go back to like the Russell look right now, and you have a Bollinger Band like this. Like, to me, the Russell's going to 2158. Like, I feel like right now I know it's forcing me in my mind to go and look for shorts.
Mm-hmm.
Because it's so smooth, I could see that look like they built this base higher. They're starting to go lower the day following the Fed. I feel like there's just more, there's macro reasons. I look at it and go, I could sell this rally, right? I'm going to wait for a rally to sell.
Yep.
And I go back to look at where I was in S&P when the tape was choppy, and I caught myself into a couple swings where I'm like, I just got, stopped on them. And I'm like, what are you doing? You know what I mean? And so I go back and go, why are you feeling compelled to do this when in reality it wasn't smooth? You knew the tape was choppy. And that's why the last few days or last week or so, I've just really stayed away from S&P because I've not been doing great at it. It's just because it's not my tape. And recognizing when it's not your tape, regardless if you get a signal or not, sometimes that's just the best thing to do, is remove yourself from the equation and just wait. And when I get something that I like, then I'll pounce on it.
Yeah. Okay. Awesome.
Last thing I want to talk about today, I just want to pull this up. I didn't talk about Bitcoin at all today, and obviously I think that's playing a role in this overall equation too, although I don't really trade Bitcoin or Bitcoin futures much these days at all. I've been focusing more on the indexes. I didn't even get to rates today, but I mean, everyone can pull up a chart on the 10-year right now and see what that's doing as we got 10s. I think they're below 4% last time I looked, but
They are, 395.
Make sure you understand that CME Group has also got microcurrency, cryptocurrency futures and options. I think this is important. If you're looking at this overall macro environment, don't discount the micros for the Bitcoin and the ETH, and also know that there are options. It's important to know that because look at this Bitcoin and all these other markets can be really busy. And like I said, I know we didn't talk about it today, but these markets they play a role now. They're here to stay. And so, make sure you know that CME Group has the cryptocurrency futures and options.
Awesome. Thanks for that, Anthony. Where can people find you if they want to learn more?
And Anthony Crudele on X and anthonycrudele.com.
Great. We'll do this again next week. I want to thank you again, Anthony. It's always great talking to you. We're going to take a quick break. And as Anthony mentioned, Jim will be back after the break with the one and the only Blue Putnam. We're excited to have him back. We'll see you real soon.
My man.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years,